Hello, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor, finance presenter on ABC News, and from next year, a columnist with the ABC.
And I'm Stephen Mayne, a contributor at Intelligent Investor, the founder of Crikey.com and a shareholder activist.
And I'm James Thomson, senior Chanticleer columnist at the Australian Financial Review.
And we are
the Money Café. With an audience.
Here we are in beautiful downtown.
Whoa, look at this.
We have an audience, everybody.
First ever
This
live
is
show.
Great.
Yeah.
It's fantastic.
Well done, Greg, for pulling this together.
Yeah.
This is bigger than an AGM. We've got
Well,
at
a
least
lot of
15
AGMs
shareholders here.
It won't be bigger than the AGM that's on right now, will it?
No, NAB's on now in Melbourne, so start at 9:30, which is our kickoff time. So I've lobbed 4 online questions at 8:30 when they opened the question box, and then came down here and thought I'd chat to you guys.
You're unbelievable.
It'll be pretty quiet, though, I think, Alan. But, Stephen, tomorrow's AGM, for Thursday's AGM with ANZ could be a bit more exciting, right?
Yes, I think probably big REM strikes and some angry shareholders. So you'll get the climate protest today at NAB, like they got at Westpac.
Yep.
We're 30% against the board's recommendation because the climate transition plan's too slow. But you're right, the big protest on the REM and anger at ANZ, that'll be tomorrow.
Should be actual fun at an AGM.
And they'll be saying goodbye to Shane Elliott, I guess.
Yes.
And hello
9.5 years.
Yeah.
Nuno Matos, but he doesn't come till next July, so he'll be there in spirit.
But you know, did Shane Elliott have to be pushed before he jumped?
It's a $64 question. I mean, I think it's got a bit of that vibe, yes.
Yeah.
Yeah, I mean, he had 9 years, which is very long for a CEO.
That's right. And he still didn't want to go. I thought that was amazing.
I'm surprised about the timing, though, I must say. They've still got this ASIC issue to get through. So ASIC's investigating this bond trading scandal. It's not resolved. ASIC's not letting go. And yet now they have to sort of still navigate that, perhaps with Shane as a lame duck CEO for the next 6 months. It's a bit of a weird one.
You do get these sacrifices just before the AGM voting closes off. Like ASX punted their chair just before the AGM to head off protest votes. Richard Goyder at Qantas last year, they announced he was going to sort of fend off. So I think there was a bit of that with ANZ.
Yeah, maybe. Well, except it's not going to work, right? They're still going to get the protest vote.
Well, yeah, but would have been bigger if they hadn't given a bit of red meat to the angry shareholders.
Yeah, true.
Yeah, that's true. Okay, so we're going to go for roughly an hour today, longer than usual, and we're going to start with our winners and losers for 2024.
Okay.
So, James, who's your biggest winner?
My biggest winner is Robin Kohler, who is the founder of AirTrunk.
Of course.
The data center business that was sold for $24 billion to Blackstone, the private capital giant, in September. So this business is 9 years old. It's now been sold twice, once for $3 billion 3 years ago and now $24 billion. Robin is an amazing guy. Came from Bangladesh when he was 18, landed here as a sort of penniless student. Had a number of jobs. He was at a listed company. You might have even been to their AGM, Stephen, Mint Wireless. He was sacked from there as the CEO after a difference with the founders and decided to strike out on his own and start this data center business long before data centers were cool. And he's turned this thing into a beast by cracking the code of opening data centers in Asia.
And speaking of data center beast, we've got the Digicel IPO as well.
That has turned into a bit of a famine rather than a feast.
Oh, I see, yes.
Issued at $5 and went down to 20% after the listing. So not all data center businesses are hot, but AirTrunks is. And I mean, Kuda was so... at one point, he was so destitute starting AirTrunk that he tapped into his own superannuation, illegally probably, to fund the business for a bit longer. Repaid his superannuation, but he does say he's had a letter from the ATO about it. So even when you do $24 billion,
I think he's going to be okay when he retires. Don't you think?
I think he picked the top actually. Like $24 billion for AirTrunk was ridiculous, and then you're right. The Digico float has dropped by 10%. I think even NextDC went and did a capital raising. They raised $678 million at $17.15 on the coattail, saying, well, everyone's hot for... And now the stock's down to $15.54. So the investors in that capital raising are 100 million underwater. So I reckon there was a bubble. No. And it's come off 10, 15% from the absolute top, which Robin Cooter picked with his $24 billion exit.
Well, I mean, he hasn't exited,
but
his entire net worth is still tied up in it. I don't think this is the top, and
no, I think I agree.
I think in 10 years' time, I mean, next DC and Digico are pimples compared to AirTrunk.
I reckon Blackstone went 24 billion for that, so people would stop talking about their disaster at Crown, where they paid 10 billion. Because the last thing you want is worst investment in Asia is Crown. Now it's biggest investment in Asia is Digi and AirTrunk, and everyone's talking about how big it is, and no one's talking about Crown, where they've smoked about
maybe
$4.5 billion.
I'm not sure many people on Wall Street are talking about Crown Resorts. To be fair,
well, what a dog that is.
Yeah.
Now, Alan, what's your winner of the year?
Oh, Elon Musk, surely. I mean, he's picked the winning president big time. Backed him both emotionally and financially, and has now regained, possibly as a result of that, has regained his position as the world's richest man. What's he worth? More than $400 billion now.
Yeah.
I mean, unbelievable.
Yeah, the jump in Tesla shares has been crazy. Totally crazy. But anyway.
And it's all about self-driving taxis, right? And robots.
I think it's just about the vibe of the thing, really.
Yes. But to the extent that it's about anything particular,
yeah,
everyone seems to be excited about the self-driving taxis.
Which I get, but give me a prediction. How many years will it be till we see a self-driving taxi on the mean streets of Camberwell out here?
Oh, ages, I would imagine.
What do you think?
Is it 5 years?
Is it 20 years?
Oh, no, I think it could be 5.
I don't know, but I'm with you. I think it's going to be longer rather than sooner.
Yeah. I did watch that Tesla EGM where he got his pay deal reinstated, his $50 billion pay deal reinstated, which the same Delaware judge has now knocked over again. But the stuff he was saying about we're going to be a $30 trillion company, I mean, I just can't believe some of the stuff that comes out of his mouth.
No, that's fair enough.
The markets still love him. I mean, it's unbelievable.
What about you, Stephen?
Well, I'm going to go Chemist Warehouse because I listened to our end-of-year chat last year, and that deal has just been announced, and I was saying, 8.8 billion valuation on Chemist Warehouse. It's overdone. I
reckon
the top
again.
The ACCC will block it. I think it won't go through, and you were, with all your corrections better than us, you were saying, I think it'll get done. Anyway, fast forward 12 months, and Chemist Warehouse is valued by the market at 25 billion. The Sigma share price has gone from 76 cents when the deal was announced to $2.76, valuing Sigma alone at $4.5 billion, and that's only 15% of the combined entity when it comes together. And these guys, they just keep on pushing the envelope. I mean, they released the 400-page information memorandum for the vote on the deal at 4:23 p.m. last Friday when I was watching. You know where and when they're having the vote on January 29? 6 p.m. at a pokies pub in Preston, the Olympic Hotel, just around the corner from the Chemist Warehouse.
6 p.m.
6 p.m. hybrid meeting at a pokies pub, which fleeced 10.7 million from gamblers last year.
Oh, Jesus.
They get away with it. They push the envelope. The ACCC didn't block them. And I just say, too good to the Gantz and Verrocchi families. You're each worth 8 to 10 billion on paper. And Chemist Warehouse is the deal of the year. They got away with it. They got it done. And it'll be floated in February. And it's more valuable than Coles.
Yeah.
Chemist Warehouse. It's just extraordinary.
Is it more valuable than Coles?
Well, on the current Sigma valuation, I mean, I think it's a bubble. But after what I was saying last year and proven wrong... it's going to triple. I mean, what do I know?
Who knows where AirTrunk's going based on your track record?
That's right. But Chemist Warehouse is just extraordinary.
What about your biggest loser then, Stephen?
Well, look, I was going to say all the casino companies, but I'm listening to yesterday. I did that last year. I said Star Entertainment was the biggest loser. So I'm going to pivot to
they are a carryover champion.
Shares at 20 cents, 3 billion lost. It's absolute debacle. But I'm actually going to pivot to the CFMEU as the biggest loser of the year. I think the way they got done over by Nick McKenzie and Nine, I think it was extraordinary. The contagion, which is blowing now into the industry funds, and particularly CBUS. There's quite a debate going on now about the whole industry funds, governance and performance. And I think that the scale of the CFMEU's just dodginess, and the blowouts in construction costs that cause, how that feeds into the housing crisis, and the takeover by bikie gangs, I just think that was absolutely appalling, and great work by the Nine journos to take them out.
Yeah. What about you, Alan?
Well, speaking of Nine, I was going to give a special mention to Mike Sneesby, the CEO,
Yes.
who's come a cropper, because of culture wars in there. But actually, we ought to mention Hugh Marks as a bit of a winner.
He's your new boss.
He's my new boss.
You got his mobile number like Kim Williams?
And what else? Losers.
Yeah.
Well, Chris Ellison of Mineral Resources, surely.
Yeah.
I mean, what a bloody, what an effort that was.
He's mine too. I mean, it's one thing having this sort of tax avoidance scheme that you'd forgot to tell anyone about and fessed up only recently to the ATO. But it's another. I mean, this guy's a billionaire, and yet he's been using company resources for people to work on his boat and work on his personal finances.
Yeah, so it was
and
more
work on
than
his
just
properties.
tax evasion, wasn't it? Yeah, really.
I mean, it's just hubris. Like, I just don't understand how you can be so rich and sort of need to nickel and dime your own shareholders.
Yeah.
Ugly look. I mean, the shares are off 55% from the peak this year, but this story's not over because Chris Ellison's not leaving for 12 to 18 months, and there are plenty of shareholders who want him to stay. This is going to take a really strong board to get him out.
I actually reckon there's a bit of a new theme emerging, which is billionaires behaving badly. I think this whole sort of oligarch inequality, from Russia, the mafia state with Putin and all his billionaire mates, to the way Musk has come in, increasingly our billionaires getting more and more powerful. Gina Reinhardt influencing Dutton. And I reckon a lot of them behave very badly. You're right.
Yeah.
Do we include Bashir al-Assad as a billionaire?
One of the
Not
worst.
anymore, I don't know.
Well, he seemed to have a big... Well, that's right. He had a big collection of motor
Vintage
cars.
cars, yeah. They're driving around Syria at the moment.
Another loser, I thought, was Lachlan Murdoch, who put his dad up to this court case in Reno, Nevada, to try to keep him in control of it, and lost. Presumably, obviously, they're going to appeal, so we don't know where it's going to end up.
Yeah. Well, yes. And, I mean, I think there's still a question. Stephen, you probably know more about this. The question for me is, like, what do the other kids want? We sort of know what they don't want. They don't want Lachlan to get control.
I think they want to sell Fox News.
Yeah. Do you think that's it?
Yeah, I think they want to remove the family taint from Fox News.
And do you think Elon Musk buys Fox News?
Well, he can afford it. He can afford it.
Well, no, he says mainstream media is dead.
Stranger things have happened.
Yeah.
Oh, there's one for you. There's a 2027 prediction.
Well, we are struggling, mainstream. Well, mainstream media is... it's 9 shares are down, 7 shares... battling. It is all those radio companies that keep going down, Southern Cross and ARN. I mean, they've got $1 billion of accumulated losses. It is not easy times.
No, it's a super tough sector.
In old media. But to Murdoch's defence, Lachlan's defence, I mean, the News Corp shares are at a record high, mainly because of REA. Fox Corp shares are near a record high, mainly because of Fox News.
Yep.
So from a financial point of view, they're doing well. It's just a shocking effort to see your own siblings.
And that's the question for investors. If you're buying this thing on a long-term basis, 5 years... Rupert's probably not around in 5 years, so who's going to be running the joint? You want it to be Lachlan based on the last 12 months.
I just think they need to have professional managers and Murdoch sitting there with non-executive positions. I mean, who can run those two big beasts long term?
Well, they can. They have.
Yeah.
It is interesting that the judge in Reno spent 90 pages saying that Rupert and Lachlan were acting in bad faith and so on. I mean... Really, it was...
The US legal system's so theatrical. It's great.
Yeah, it is good.
So good fun. Yeah. Such good fun.
Yeah.
Stories to watch, Alan?
So, I wanted to go with you first because I wanted to talk a bit about CBA.
Okay. Well, my one, I've gone very micro rather than macro. You guys will get onto the macro fun stuff. But for me, the story for that share market in Australia next year is what happens to the CBA share price. So the big banks have driven 55% of the gains on the ASX this year. CBA's up 36% against everyone, every analyst and institutional investor's better judgment. What happens next year? Is there a catalyst for this share price to suddenly reverse? Does it plateau when everything else catches up? Or does it start to slide? But for what reason? I mean, we're going to get interest rate cuts, which should spur a bit more credit demand. There's no great gremlins in the economy. They would have come out by now. So what's the thing that sort of deflates the share price.
I spent last night actually writing an item for my weekend briefing in Intelligent Investor with the heading, "The CBA Bubble."
Right.
Exactly looking at this exactly as to what the hell is it. Firstly, is what's it about, and secondly, what can happen now. And the item starts off with a chart of the CBA share price and the S&P 500 from the low point of COVID, which was March the 16th, 2020. Right, that was the bottom.
Yep.
And the S&P 500 in the US and the CBA share price since then are up exactly the same.
Wow. There you go.
So if the US is in a bubble, so is CBA. And you're right. I mean, the question is what happens now? I mean, how it's now. I interviewed Nathan Bell from Intelligent Investor during the week, and he said it's now officially the case that CBA is the most expensive bank in the history of the world.
Yeah.
I listened to your interview with Matt Common last week, the CEO, and I reckon he's probably the best credentialed CEO in Australia at the moment. Maybe your Pro Medicus mates, you'll come back, but it's a pretty narrow business. CBA was in a world of pain a few years ago.
Yeah.
The zeitgeist was out saying you got to clean everyone out, you got to go external, you got to bring in the clean skin from overseas, like ANZ's now doing, and they held the line. They said, no, we've got this really talented young guy, we're going to slot him in there. And he has done an extraordinary job. Even the way he ducked and weaved around this recent scandal about the $3 charge. I'm listening to your interview. He didn't know about it. Someone else made the decision. He intervened and fixed it. I mean,
he's very clever. Some columnists might have said when he was appointed, what a bad idea too. Anyway,
is that you, James?
Yeah,
is that right?
Absolutely. I thought it was. I thought it was stupid for all those reasons. Like the business was busted. It needed an outsider, but turns out sometimes the mix of the insider with who wants to shake the joint up without breaking its institution.
And you know the next example of that? Vanessa Hudson at Qantas.
Ooh,
the zeitgeist was you've got to clean them all out. She's been there 30 years. They've slotted her in. Stocks at $9 at a record high. They've paid off the TWU, the $120 million yesterday. They've done the $100 million settlement with the ACCC. They have got away with it more than anyone. They have absolutely got away with it. How can their shares be at a record high after all those scandals?
Well, because Alan keeps flying business class everywhere.
Tell you what, if they're relying on me, they're in trouble because I'm not doing any travel at all at the moment.
Wow. Okay.
So
maybe it's Greg.
And anyway, when I travel, it's economy.
Oh.
But you're still a member of the Chairman's Club,
the Chairman's Club.
Yeah. They haven't,
They
haven't kicked you
okay,
out.
well, I'm guilty as charged on that score.
Yes.
All right. Now CBA is very narrow, though. Stephen, there's got to be there's bigger stories next.
Well, I mean, I saw it. Watch. I went for the whole geopolitical. So many elections. Will they elect Trump last year? And I reckon it's been a pretty dramatic year on the geopolitical front. So my story to watch this year is just going to be Trump in office. What he does.
Yep.
How crazy is he? Does he pull it off? And Australia's federal election. Will we buck the trend of incumbents being thrown out all over the world? Will we have our first ever one-term government since the Second World War? Or can Labor hang on in a minority with Teals?
Here's my prediction. It'll be a minority government and Albanese will just scrape in.
Yeah. Well,
there'll be more Teals.
Yep.
I think that sounds entirely reasonable at this point.
And we'll be talking a lot about nuclear, which I don't understand what Dutton's doing with that. I think that's going to hurt him. I think that's his biggest problem.
I think the nuclear thing is mainly directed to internal politics of the coalition to try to keep the coalition together on the subject of climate change.
Yeah,
it's really the only thing he can do that will not splinter the coalition.
And it does extends coal-fired power as part of the plan.
That's right, and it keeps the Nationals kind of happy, but it also keeps the low emissions people happy.
But the whole Liberal philosophy of responsible financial management, I mean, this is a government-funded, hundreds of billions of government investment. It's just how do you justify that when you're the party of good economic management and budget surpluses? I don't get that.
Easy, because nobody cares about that anymore. I mean,
that's right.
Just like stock market valuation, nobody cares.
Nobody cares. No, but people actually prefer government ownership. I think that there's there's a shift back in the kind of public mood towards government ownership, away from
Queensland
privatisation.
Labor was going to reopen a bunch of government-owned petrol stations.
I think that I actually think most people don't think for a moment that the government is going to build 7 nuclear power stations off their own bat. I mean, no one believes that for a minute, I imagine.
Yeah.
But do we? Do you believe it?
No, I don't necessarily. Yeah, I don't know.
No? Okay.
No, probably not. But I think Stephen's right. It just lets them keep talking about it. I think we'll be talking about it for a few years.
That's right.
Well, I mean, they want governments to do everything. I mean, this is a pivot to your story to what hell the US government's going to set up a crypto reserve.
Yes.
I mean, government's getting into owning crypto in the central bank alongside the gold.
AMP's got it now, so anyone can do it.
AMP's got it. That's what
I've got. There's crypto ETFs.
I've got crypto as one of my stories to watch next year. I just think it's in the process of going more mainstream now.
Yep.
Largely as a result of Trump and Musk and the rest of these. I mean, he's got this bloke. What's the guy's name? Who's now head of the budget office, the congressional. The White House budget office. Anyway, he's in charge. He's a big crypto fan.
Yeah.
Scott Bessent, who's head of Treasury, is a crypto fan. I mean, the whole place. I read this thing that like 2/3 or 3/4 of the people who have joined Congress this year are crypto fans.
Yeah, they've stacked out. They've done a great political influence operation, the Crypto Bros.
That's right.
Yeah.
So I just think that it's going to become whether they end up setting up a crypto, Fed. Or government reserve.
That's called a government bailout of the crypto industry. Well, you still can't do anything legal with crypto, I would argue. It's worth $2 trillion in investment value, but you can't actually do anything legal with it. It's a crazy bubble. I don't think
it's ever going to be money. I mean, it's not going to become money.
No.
Someone wrote to me the other day saying, if Bitcoin takes over as the currency, what'll it be valued in? US dollars or what? And I wrote back saying, well, I presume it'll be valued in Bitcoin.
Yeah.
So 1 Bitcoin is equal to 1 Bitcoin.
That's a good question, though,
just rename it the Global.
The Global, yep. The Musk. No.
Anyway,
that's about it.
But I agree with you. It's at $2 trillion. It is. Can't believe it's gone this far, and it's going to keep going with Trump.
And it's not just. It should be noted that it's not just Bitcoin. The prices of a range of cryptocurrencies are going through the roof.
Yeah.
A lot of them, as I keep writing, I've written a few times now. Most of these cryptocurrencies are subversive. They're designed to basically they're the Ubers or Airbnbs of financialization. They're all mostly designed to be peer-to-peer exchange.
They're smashing the government monopoly on currencies.
Yeah. That's right.
Idea,
no, it's not just currencies. It's basically their platforms for people to exchange. Yeah.
Organised crime, love it. Online gambling loves it.
Cryptos like Cardano, Solana.
Isn't Tether the big one?
XRT.
That's become the big.
Well, Tether is a
money remittance type.
Tether is a stable coin, which is tied to the US dollar. I don't really understand that, and it seems to have been the subject of scams, like big time scams.
Yeah, okay.
So I don't really.
Yeah.
I'm kind of putting that to one side. The others are Ethereum is a smart contracts business that enables people to have transactions and contracts with each other rather than having a lawyer.
We should free Sam Bankman-Fried. 25 years was way too long for that poor crypto pioneer.
No, but Sam Bankman-Fried and a bunch of them are just crooks, right? So there's crooks in every field, particular in normal money, right? The world of normal money is full of crooks, right?
Yeah.
So is crypto, but that doesn't mean that crypto's fundamentally crooked. That's all I'm saying.
No, totally, yeah. Well, I think we're just still in the early part of figuring out where it fits.
Okay, it's time to go to our final questions for the year. And before we do, let's hear from our sponsor.
Get a head start on your financial goals for the new year with InvestSmart. Invest in any of their capped fee portfolios and they'll add a $100 bonus to all new accounts opened and funded in December 2024. Whether you're after conservative, high growth or global exposure, you'll find a portfolio to suit your goals. Visit investsmart.com.au to learn more. Remember, past performance isn't a promise of future success. Terms and conditions apply.
Okay. Kurt's question was on last year's episode of Winners and Losers of 23, you each made your predictions of the following year. James and Stephen both very quickly and quite certainly predicted down.
Share market. Yeah.
I don't remember. Did you use that right?
Correct.
You predicted the market go down.
Yes.
How wrong can you be?
Thanks.
And you said sideways.
I know, I was wrong too.
8.5%, that's how wrong.
It went up. Needless to say, you're all wrong. I don't mean that as an insult. Obviously, we're all tuned into Money Café to hear your take. However, it's important when giving predictions to honestly follow up on them. So, okay, all right. Well, so our predictions.
We made 7 predictions, though. Kurt's just focusing on the one we got most wrong.
Oh,
right.
Do you have a full?
What are the 6?
Full accounting here? Does it make us look better?
We all were correct in saying official interest rates would not move for the year.
Hey,
so we did quite well with that. I was wrong saying inflation would get down to within the 2 to 3% band, but you were both right saying that it wouldn't.
Yep.
You said housing would keep going up, James, by another 5%, residential housing.
That's about right.
And that's about right.
right.
Yeah, so
well
overall,
we did okay, Kurt.
We weren't that bad, but I guess we probably should repeat the dose this year and make a couple of predictions. So what do we all think? ASX 200, up or down?
I'm going to go sideways again. I don't know.
Yeah, I'm sideways too, and for the reason that shares have gone up 8.5% this year. Earnings have gone down. That is not what usually happens. So unless the earnings growth comes through in a major way, which it's predicted to be sort of 5%, I can't see why shares keep going up. Obviously, I was wrong last year, as Kurt's told us, but even if the earnings come through, that's already in the prices. So sideways for me.
I reckon if it's not sideways, it's like 25% down.
Oh, Kurt is writing that down.
Just to be different, I'm 5% up.
Okay.
All right.
What about official interest rates, Alan? You're sticking with your 2-year bet? They won't move for 2 years?
Yeah, so close to 2 years. So I'm saying 1, maybe 2 cuts in the second half of the year, not February or May.
Well, I've been saying there's going to be a cut in February for about 18 months, so I'm not leaving it now. I'm sticking with a cut in February and 3 cuts for the year.
And I think it'll be 4% this time next year, down from 4.35. Now, what about house prices? Captain Housing, quarterly essay bestseller. What do you say?
Captain Housing.
Melbourne house prices have started falling. Sydney house prices are falling. I think the median will be down by the end of 2025. The national median house price will be down, I don't know, a few percent, 3 or 4% maybe. Perth, Brisbane probably still rising.
End of the year, the national median will be up another 5%. Following interest rate cuts. There's so much pent up demand out there.
Yeah.
All right. Well, I think that's enough with predictions.
Okay.
Avery, who is an international student, says this podcast really helped me in my international student uni days to get an understanding of Australian business. When talking about education as an export, is education really what Australia is exporting? And Avery goes on to say that she's now a permanent resident and the predominant reason her parents sponsored her to study here would be to turn that student visa into a graduate visa and then into a permanent residency, which she now has. And her wage here is 7 times higher than it would be at home, plus super and Medicare and so on. So whilst the education that Avery received was good, her parents would never have paid the 30 grand a year plus living expenses to study here if all she got was a degree.
That's really so true, and it's correct.
That's
what we're exporting is visas.
Yeah,
I mean,
an opportunity,
and everyone understands that. I think everyone involved in the immigration department, and also probably the university sector, understands that what they're selling is visas, not
it's a
degrees.
Try before you buy scheme.
It's not
Students
just
can
visas.
come in, and
it's just the way to get into Australia. It's the way to do it.
Yeah, but I mean, the return's not bad, though.
Robin Cooter.
There
you go.
I mean, Avery's a small example, but Robin Cooter's a giant one. So,
no, but the cost is that we aren't building enough houses for them.
No. Oh, yeah, we haven't got everything right, but housing sort of has this tendency, as you know, Alan, to swallow everything. Like, is having a big education sector good? Yes. The fact that we haven't built enough houses for them, that's a separate issue. So,
well, it's separate but related.
I know it's separate but related.
Yeah, I mean, I understand.
We need strong immigration.
But I had a graph on the news, the ABC News last night, showing that the gap between the growth in population and the growth in dwellings is the largest it's ever been. I mean, usually the growth in both of those things, population and housing, is about the same. You know, the growth is kind of 1.5% a year for each, and it's fine. Everyone's fine. But at the moment, the gap is the largest it's ever been, and that's why we have a crisis at the moment. So, well, that's one of the reasons anyway.
I suspect we are going to have an immigration election like many other countries, and those promises to cut will be debated. The universities will be fighting it, so it's going to be an interesting debate.
Keith says, a consistent theme on your podcast this year has been how to get more productivity out of the economy. Surely the best way to do this would be an overhaul of the taxation system to make it simpler and fairer. Given we are going to a federal election, why are the politicians so scared of tax reform? And does the structure of our federation have to change to achieve meaningful reform? Merry Christmas! Well, you can put that on your Christmas wish list, Keith, tax reform. Not going to happen this election.
Tax reform is a very, very angry tiger, and it's sitting in a cage, and no politician wants to put their hand in.
Yeah,
because
there's too many political victims.
Keith's right, though. I mean, it is what we need to get productivity.
Well, it's one
part
of the
things.
Solution. I agree. It's one of the things.
But what would you do? Treasurer for a day, James Thomson. Tax reform.
Yeah, I think you'd try and bring the company tax rate down if you could.
It's very high by world standards.
It's very high by world standards, and we are going into a period where other places that attract our capital, particularly America, are going to be cutting again. We're just going to be way out of the game.
Yeah.
It's going to be. I mean, a company like Orica. You would have spoken to the Orica CEO. You know, he's invested $2.6 billion in the US that would have gone to Australia previously, but you can get cheaper energy prices and a better tax regime. It's not. These companies have got choices. So I think that's where you should start. But you got to change a whole lot of things to get that right. I mean,
you have to tax something else.
Yeah.
So increase GST.
Look at the GST.
More indirect tax.
Well, that's the
high
problem.
taxes on iron ore in WA.
What most countries in the world are doing is taxing consumption much more than we are. You know, like 15 to 20% taxes on consumption, as we've got 10% or 11, whatever it is now. But and the trouble with that is, of course, it hits poor people harder than rich people.
Yeah.
And it's a regressive tax.
Yeah.
But that's what everyone's doing.
I think we'd all do death duties too, wouldn't we, as tax reformers without political accountability?
Yeah, well, something around that. Yep. I mean, even, Chris Richardson was making the MyEFO's out today. The cost of superannuation concessions is going through the roof.
It's massively subsidised super, and it's far too big a tax shelter.
I think the increase from the budget to the MyEFO is $9 billion.
Yeah.
Like, that's going to...
Wow.
That's a lot of money.
Yeah.
Cost of the concessions. So, yeah. Anyway, hard to get it all right.
John says, thanks for another year of fabulous, informative and entertaining podcasts. You're welcome, John. Thank you. Throughout the year, I've listened with interest about your views on the choice of independent board members on listed company boards. There's been plenty of brickbats and less, albeit enthusiastic bouquets. I would have thought that a former finance journo would be a great choice to fulfil such a role for a company that wasn't shy of being held to account. Is there any history of such appointments? Look, I think the problem is that former finance journalists are generally burnt out and not good for anything.
And Stephen's had a crack at a few boards.
Yeah, I've never got on that.
He's never got on.
56 fails. But look, if I was going to get on a couple, I reckon I could go right on AFIC, a listed investment company with that sort of broad perspective. Yeah. And I'd love to be on the ASX board.
Really?
Helping make the rules about fairness of capital raisings and integrity of the Australian capital markets. So.
Okay.
Well, if that happened, you'd be the only one on the board because they'd all leave.
Well, of course, Alan. But what board would you... I mean, you'd be great on the interest rate setting board. for the government, maybe the ABC board, you do pretty well. I mean, you were chair of Melbourne University Press, weren't you, back in the day? You've got chairing experience. What would you like to chair?
I was on the board of that. That's my only board that I've ever been on, to be honest. No one would have me on the board because, I'm a journalist. I'm a journo. So I can't be trusted.
But Christopher Skase, Greg Highwood got to be a CEO. He was a journo.
Yeah.
That's right.
David Koch sat on a couple of public company boards. Our company, Paul Clitheroe and Effie Zahas, are both on the board of InvestSmart, which owns us.
Paul Clitheroe is a financial advisor, but he was on TV a bit. Yeah.
So, James, what boards would you love to be invited onto if you quit journalism and join the Directors Club?
I'd love to be on the CBA and the BHP board. I think that befits my skills.
Go to the top.
What do they pay? They pay about $1 million a year, wouldn't they?
Oh, I don't know. I'd do it for the... Yeah. Do it for the...
Oh, you do it pro bono?
Tony Abbott's getting $500,000 a year out of the Murdochs at Fox Corp. So, about $500,000 a year is about the going rate for a good director.
And a seat in the Chairman's Club, maybe.
Alan gets that without being on a decent board.
No, look, I the only board I've sat on is the board of a school, and it is bloody hard to be a director. It is.
I was a very bad kindergarten president, I tell you.
But I mean, this is an incorporated school. It's a lot. And you talk to directors of ASX companies, the amount of sort of pressure you're under. Yeah, it's not fun.
As soon as you have that experience, you learn how easy it is being a journo, being a Monday morning quarterback, just sitting back and assessing everyone else as what they do is so easy.
Yeah, it's and it's really important that we get good people who want to have a crack at it. So we do have to. Maybe we should give out a few more bouquets as well.
And it matters more in Australia than anywhere else in the world because of our compulsory super system forces every working Australian to be exposed to the performance of the directors of ASX-listed companies.
Yeah, good point.
So you've got to get good people on there.
Good point.
Okay, your turn.
Says, thanks for another fantastic year of the Money Café podcast. If the RBA cuts rates 3 or 4 times in 2025, as many are forecasting, what impact do you think it will have on property prices? In particular, do you think such cuts could see a rise in the value of 1 or 2 bedroom apartments and therefore closing the gap between this property class and freestanding homes?
This is a really interesting question, but maybe not for the reason that Nathan reckons. Now that we've just put Alan on the RBA rate setting board, I know the RBA doesn't have a mandate around house prices, but how worried do you think they would be about what the first cut does to house prices? Well, house prices are clearly, very strong. The market's sort of long overheated. The RBA would know, their business liaison, everything would be telling them that there's, that there's plenty of heat that will come back into the housing market if we get more another rate cut. What do you think they'd be thinking?
I don't think they'll give it a second thought.
Really?
Yeah.
At all?
Well, they'll talk about it for 5 minutes and move on. I mean,
it's all about inflation.
It is. I mean,
but not inflation of housing.
The question is, what will a rise in house prices do to consumer price inflation? That's their question.
Yeah.
And they'll kind of all go around the table and say, and they will have no idea. Firstly, they'll have no idea what it will do to house prices. I mean, I don't think house prices are remotely forecastable because we've supposedly got a crisis. It's unaffordable, right? Housing is unaffordable.
Yeah.
We have a situation where people can't actually pay for the current price of houses. How can it keep going up?
Yep.
And interest rates coming down won't make that much difference, not by 0.25%.
No, well, I mean,
a very small difference.
The tax cuts we had this year were equivalent to about a 1% rate cut, so
yeah,
that hasn't made that much difference.
It's made, well, we don't know what would have happened anyway without them. We don't know. We don't have the counterfactual,
true.
Still. Look, I don't. I've got no idea what house prices are going to do. To be honest, I mean, they shouldn't go up anymore because they can't, supposedly, because they're unaffordable.
You would have said the same thing 12 months ago, though, wouldn't you?
I would have, yeah. That's right.
But I'm with you, James. They should take account of house prices when setting interest rates.
Yeah.
So if they go up another 10%, I wouldn't be cutting interest rates.
Yeah.
Did you notice that Claire O'Neill Claire O'Neill, the housing minister, did an interview the other day with Triple R.
Yeah, Triple R J.
And they said, and the interviewer said, you'd want house prices to come down, wouldn't you? She says, oh, no. Our government policies is not to bring house prices down.
It's for them to go up sustainably.
For them to grow sustainably. The interviewer was incredulous.
Yeah.
He couldn't believe it. What?
Yeah.
And then it made social media light up like a Christmas tree. It was very funny.
Yeah.
Okay.
Pedro asks, one of the few certainties in investing is that over the long term, actively managed funds invariably underperform passively managed index funds. It's even worse once fees are taken into consideration. There aren't many investments that go longer than superannuation, and yet most people are defaulted into actively managed funds. For example, my industry fund, Aware Super's high growth option, levies a 0.59% annual investment fee and a 0.07% in transaction costs. In contrast, their high growth option charges a 0.06% annual investment fee and no transaction costs. In fees alone, this would result in a retirement balance that could be around 15% lower. It's very easy for someone with knowledge of this to change into one of these index options, but should this not be mandated by legislation as the default option? What an interesting question.
It is very interesting. I mean, it's not true that actively managed funds invariably underperform passively managed index funds. That isn't true. I mean, it may be that on average they do, but there are a lot of actively managed funds that are doing 20% a year, or 15 to 20% a year, would double the index fund.
Yeah. And the obvious thing at the moment is shares are roaring, fantastic, that's great. But over the 40 years that you're in Super for, or longer for a lot of us, shares aren't always going to be your best option. There'll be times when you want cash and bonds and unlisted assets like private equity and infrastructure and real estate. So you're paying not just to pick this. You're not just paying to pick stocks. You're paying to pick a whole smorgasbord of investment
asset allocations.
Yeah.
And one of the keys to asset allocation is the trade-off between liquidity and performance. So what super funds do to some extent is to put some of the money into illiquid assets such as private equity and infrastructure, which they can't sell easily, but they tend to perform better. And you do have a cost. Liquidity has a cost, in theory and in practice, actually. So, index funds are liquid. So the trade-off is real in terms of liquidity versus performance.
I would generally agree with the thesis that there should be more default options, which are passive index ETFs. That's where the world is going. It has performed well. And in any system design, particularly something like compulsory super where everyone's forced to be into it, whatever the regulator or the government decides is the default for those who do nothing, it's hugely powerful. Hugely powerful because the majority of people will finish up in that. It's like with shareholders. If you say we're going to buy everyone out unless you write to us and take out your unmarketable parcel, well, if you don't give them a reply paid envelope, then 90% will just get taken out because that's the default option. So they should be defaulting into more low cost, I would argue, based on the world trends.
But what you're saying, Stephen, is not they should be defaulting into it. They should be choosing those options as actively choosing the passive options.
But that's where I'm saying I'm saying the setter of the default system, as in the super fund, should be going for the lowest cost.
But let's say there's a 40% correction in stocks. Yeah. Who is going to come back and say, "Oh well, thanks for putting us in the passive options tracking global stocks. Where was the active risk management?" Like, super's not just about growing your capital, it's about protecting your capital, and yet you didn't have anything in cash. You put it all in these flipping ETFs. I mean, who's going to say, that was a great idea, thanks a lot. I mean, I think the liquidity is important, growth is important, but risk is important as well.
Exactly.
You're trying to protect the capital as much as grow it. So, and I don't know if you're going to do that, you can't go 100% into ETFs.
No,
that'd be my view.
But just thank God for our 4 trillion in super, I say.
Yeah, totally.
And if you're putting 20% into infrastructure, that's getting it valued once a year, and it's not going down by 40% when the stock market goes down 40%.
Yeah, well, it is going to go up and down. It's just not going to get valued like the stocks.
No, that's right.
But
like every day.
Yeah, I think I get where Pedro's coming from. If you look at many super funds, 55% of their default option will be in ETFs, in passive investing. But I want them to be actively managing risk. That's what we're paying them for.
I still can't believe those industry funds paid $32 billion to privatise Sydney Airport 2 years ago. And this year we've had 30 takeovers of more than $200 million, the most I've ever seen. It's tragic how the public markets are losing their preeminence.
Isn't Sydney
and all
Airport,
this unlisted industry
Sydney Airport
funds
was a good buy, wasn't it?
$32 billion, come on.
No,
I'm really worried
there's only one of them.
We've lost CSR, Boral, Altium, all these great companies this year, and many of them getting snapped up by
it would be okay.
The private equity or industry funds.
It would be okay, but we've only had 2 decent-sized IPOs.
I know.
That's the problem.
That's the point. Is public markets are shrinking in their relative dominance in capital allocation.
You're just cranky because you can't go to their AGMs.
You can't go to the Sydney Airport AGM anymore. Exactly right.
Yeah,
Less scrutiny.
Joseph says, when considering the increase in Australian house prices relative to annualised average weekly earnings, do you think it would be interesting or at all appropriate to consider the change in land size attributable to the median Australian house over time? It's commonly argued that land values appreciate while buildings depreciate. The median land size of a median Australian dwelling has surely decreased from 1980 to 2023. Do you think this would impact the typical capital gains or increases in value of properties bought more recently by younger generations? Yeah, very interesting question, because the land size has definitely come down. Backyards are out now. Nobody has a backyard anymore.
No.
But Joseph is onto something, because people forget what a huge proportion the total value of Australia's housing stock is in just the land. In Manningham, where I've just retired, there's $75 billion of capital improved value, $50 billion is land, and $25 billion is buildings. So to get house prices lower, just cut the value of the land from 50 to 25 billion, and away you go. When Docklands got developed in Melbourne...
What do you mean cut the value of the land? What are you talking about?
I'm saying that the construction cost you're saying is no one can build apartments. You're saying.
Yeah.
Well, if you don't pay $30 million for the block and instead you pay $5 million for the block, all of a sudden the apartments become completely buildable. When Melbourne's Docklands got developed, the governments gave the 7 developers the land for free. And that made it economic to put tens of thousands of apartments.
Oh, I see.
And ANZ.
Yeah, but the government doesn't own any more land, or not that much anymore.
But they can rezone to make land more valuable and more available. So I think the cost of land and availability of land is a massive factor in this housing supply and housing affordability debate.
Okay, fair enough.
I mean, I should say that the median house price value that we use from CoreLogic is called hedonic valuation or whatever, and that is meant to account for changes in various things, changes in the houses, if they've been renovated, increased in size of the houses, and also the change in land value. So I haven't specifically queried them about to the extent to which they adjust for land size, but
I'm not sure. Yeah,
but if I think Joseph's onto something, and probably we should look at it in terms of per square metre land value, which would be a better way to go, wouldn't it?
You might get another essay out of that.
What a good idea! I'll do another edition.
Yeah, exactly.
Yeah.
Now, we've got a few questions. We're a national podcast, but we've got 3 or 4 questions very Victorian focused, and so we may not do all of them, but this is one of them. Matt is saying a few weeks ago, Dave Richardson and Greg Jericho from the Australia Institute wrote a piece critiquing the media attacks, and the Fin Review's been part of that, James, on the Victorian state government debt, claiming that Victoria's budget and economy are doing well and that the media are overstating the issue. Now, with long-term Victorian Treasurer Tim Pallas resigning this week after another round of tax increases last week, I'm wondering if you have any thoughts on this and the extent to which Victoria's debt is a problem.
Well, look, we've run very hard on this. We had some great analysis by Saul Estlake, who Tim Pallas dismissed as a liberal.
We being the Financial Review,
yes.
not the Money Café.
Not the Money
we haven't
Café,
run hard on this, but the Financial Review definitely has. The Financial Review is completely biased against Victoria.
Right, yes, of course. Look, I don't think it's... I'm not sure. Saul Estlake said that in his analysis that Victorians should expect spending cuts and tax increases. I mean, what did the budget update have last week?
Well, the surplus is blown out by another 1.4 billion to 3.6 billion.
Surplus?
Sorry, the deficit.
Deficit,
I should say.
yeah.
The Tim Pallas, when he became treasurer, the state debt was in 2014. The state debt was 22 billion. Now it's 156 billion, heading to 188 billion, and we're borrowing 400 million a week in new money.
Yeah.
And Tim Pallas is now riding off into the sunset.
He's riding off into the sunset to join a few boards, probably.
The pandemic was, a big shock to the Victorian budget, but it just feels like Victoria's come out of it a lot worse than other places. So
Partly because we had bigger and longer lockdowns.
Well, of course, yeah.
That's right.
That's right.
And we'd sold everything off. There's nothing left to sell.
But it's also
Other
the
states
case
have
that
still got a few things they could sell off.
But I mean, the questions. I mean, the questions that we've got go to the property. A lot of them go to the property sector. I mean, we're actively Victoria is trying to disincentivise investment, residential property investment.
Yeah, well, we've got the highest property taxes in the country, and the fire services levy last week got increased again.
Yeah,
because state governments have got a few options.
And I was told the other day that there's hundreds of beach houses for sale.
Oh, absolutely.
But people just can't sell them.
Yeah,
mate of mine's
trying
got
to
his
get out of
$17,000 land tax bill. He's selling his Portsea weekender. I mean, it's just,
Yeah, but he won't be able to sell it.
Well, that's right.
No, there's no buyers.
Yeah.
So they are certainly squeezing the property lemon big time, and it is going to start to affect. So we've seen it with house prices already.
House
off.
prices are down in Melbourne and Victoria.
They've just got the capital works budget in Victoria is $20 billion a year. When they came to office, it was $4.5 billion. So they've just got to get back to $8 to $10 billion a year and stop stupid projects like the suburban rail loop or the $26 billion northeast link. And that's the problem. They've just gone crazy with hard hats and high vis because it was politically perfect for Dan, and everyone loved it.
A big vote
Get
winner.
stuff done.
Yeah.
Okay,
All right.
your turn.
Okay, I'm going to
James?
skip to Russell's question. Russell says, in response to a listener question the other week from Andrew remarking that I don't ever remember a homeowner, i.e. the wealthy Australians, writing to the Money Café complaining about house prices. Here I am, says Russell. I have a house paid off and I don't own an investment property. Whether house prices rise or fall makes little difference to me, but a big difference to those without their home already. If I have to move in the future, I'll be buying and selling in the same market, whether it's up or down. I have friends and work colleagues, many of them younger than me, who are struggling to save a deposit or buy a house or have given up entirely, which is really sad. I want housing to be more affordable, which would mean prices falling or stagnating over a length of time as wages rise. I want others to be able to afford a place to live that gives them long-term stability in their housing, which renting does not. I regularly join conversations complaining about housing affordability, and I'm genuine in my feelings about the topic.
Well, Russell is speaking my language.
Yeah. There was some great graphs that you mentioned a great graph. Jonathan Mott, the Barrenjoey analyst, had some great graphs from property consultants Oliver Hume, which basically showed the gap between what a couple with no kids in Melbourne and Sydney can they afford a house and land package. And basically what it showed is the house and land package has gone up about 40%. Borrowing capacity has gone down 24% in the last 6 years. 6 years is not a long time, but the change in the country since then is just remarkable to me. And I mean, I think we've said it's going to be an immigration election, it's going to be a housing election, and a cost of living election too. So
Sure, and the immigration side of things is related to housing as well.
Yeah,
I mean, I think housing is everything. I think it's changed everything about the economy and about society, about the way we live. The fact that you can't afford a house. And I think there's a fundamental problem, which I don't know the answer to it, is that if you see housing as an investment, as people do, and I think I've probably said this before, but as investment is seen as housing is seen as an investment as well as a place to live. Investments need to return their cost of capital.
yeah.
and the cost of capital is 6.5%. That's the debt. Opportunity cost, investing in the share market, 8 or 9%. So, but the housing cannot return that kind of return, 6 to 9% returns, because that's the problem. So we need to have a situation where housing does not provide an investment return for like a long time.
Yeah, well, we're in a real bind, and Russell's right and you're right. It is eating away at the sort of fabric of the place.
Yeah.
And I think it's just we're just going to have to be patient. I know that's not easy. It's easy for me to say.
Every time I hear the phrase housing market, it makes my skin crawl. The idea that it's a market and like an investment market.
Yeah.
So it sounds like we need more government intervention now. I mean, Donald Trump said drill, baby, drill. I reckon that the mantra should be build, baby, build housing. Just governments, state, local, federal, get out there and build more housing, and that will reduce prices.
I think it's true that it won't happen any other way.
Yeah.
Because, I mean, Russell's right. You need house prices not to change for a long time. And the only way that's going to occur is through an oversupply of housing for 20 years.
And that jumbo legislation day when 35 bills passed on that Thursday, that included the corporate ownership of housing. So they're getting rid of the tax disincentive. So far more build to rent, and funds can now own housing, which I think is a good reform.
But that was just a reduction in the withholding tax for foreign corporations from 30 to 15%.
Yeah, but it's
really.
And we do have to throw a lot of things at the wall, though.
I know, but that won't do it.
No.
Now, our last question is from John.
From John.
Long-time listener, thanks for the show. Firstly, when do you think the government will index income tax brackets so we don't have these political games with tax cuts? We'll always be behind the 8 ball until they do this. The Stage 3 tax cuts were a joke, a promise not kept. Secondly, it might seem all fine to tax someone's super contributions at 30% if they are earning more than $250K a year, but I think it's an unfair system if this is not indexed. I can have $1.5 million in my super, be over 60 and pay no tax on my fund, but if I have $100K in my super only and happen to have a cracker income year, I've got to pay 30% on my super going in. Not everyone who earns a high income has huge super. Well, where do you start with super? I mean... I say once you've got 1 million in your super, no more tax preferred, just that's it. But
1 million.
1 million. Wow.
Yeah,
they'd be riding out here in the Camberwell car park.
Well, that's right. But it's a massive tax shelter. I mean, come on. Our super system is a joke.
Yeah, it's really hard though, isn't it? Like the point of super is you need certainty over a long period. You don't need to be tweaking it all the time, but yeah, there's going to need to be some sort of tweaks.
Oh, it's going to be something. What about the other one about
indexing tax?
Indexing tax scales.
A good policy.
Yeah.
Sure, that's what obviously
costs a lot of revenue though. I mean, governments make out like bandits on bracket creep.
Yeah.
Absolute fortune.
That's right.
You mentioned we had Matt Common on the podcast, the Chanticleer podcast last week, and one of the points he made was what concerns him is the disproportionate burden falling on younger workers to fund superannuation tax breaks and healthcare for older Australians. I wonder if that is going to resonate more at this election. Probably not, but it is, our older generation's going to have to recognise that and give a bit back.
They are massively subsidised relative to the youth with their HECS debts versus those who got free university educations pre-88.
Yeah.
It's massively unequal. I'm glad they're cutting those HECS help debts for the students of today. I mean, it's rough being young. It's totally rough.
But I think Common called it sort of the compact that we have as a society always is that we leave the place better for the next generation. It's hard to make the argument we're doing that at the moment.
Yep.
That is a serious problem. What a bummer to finish on, hey?
Well, let's finish on...
Nice.
Greg's given us Christmas crackers.
Yeah.
So let's finish on cracking them open.
Okay, but before we do that, can we acknowledge Greg?
Oh, yes,
Greg.
Greg.
Who is our super producer.
Super producer.
Every year he makes us sound good and organises everything. And Greg, we love you. You're Not only are you
We
one of
do.
the great super producers, but you're also become one of the great power lifters of Melbourne this year.
And he also subs and produces all our written content. I mean, most podcasts list about 27 people they thank at the end who were involved in putting it together, and we've just got Greg who does everything.
We've got Super Greg. Thank you, Greg.
Thanks, Greg.
Thanks,
Amazing
Greg.
effort.
Good on you. Okay.
Let's crack them open.
Oh, well,
Thank you.
That didn't work.
that's our wonderful audience.
Oh!
There we go.
And, Alan, we should thank the fantastic people from My Other Brother Cafe for accommodating us.
Yeah, that's right.
It's a takeover.
They look slightly surprised, but we've sold lots of coffees, I think. So.
And thanks to everyone for showing up today.
Yeah,
it's been
thank
great.
you.
You could come.
Yes.
Good on you. Okay, so we take a break over the summer. Thank you for your company, and have a Merry Christmas and a Happy New Year. I'll be back with Stephen Mayne on January the 29th. So if you've got a question for us then, send it to the Money Café at eurekareport.com.au. Till then, I'm Alan Kohler, founder of Eureka Report, etc. And from next year, I'll be writing columns for the ABC website as well as presenting on ABC News.
Will Hugh Marks sub them? Will he oversee them or?
Hugh Marks.
He will love them and read them. That's his only involvement.
Yes.
I don't know I don't know how the ABC operates there, Colin. I don't know.
And I'm Stephen Mayne, and we'll see you on January 29.
And I'm James Thomson, Senior Chanticleer columnist at the Financial Review.
Thanks, everyone.
Thank you.
See you
Over
in
and out.
2025.